Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about silver because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market is currently testing and rejecting a very strong area of monthly demand and support. In fact, from here, the market created this horizontal range after then rejecting to the downside. Now we have broken above the zone and we're currently retesting it as support because, as you know, previous resistance, once it is broken to the upside, is turned support. And as we're testing this previous resistance turn support, we could expect a potential rejection to the upside, which is in fact what we are currently seeing. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how the market has just shifted from creating lower lows and lower highs to now creating for the first time a higher high and a higher low from a weekly perspective. In fact, last week, we have seen this weekly candle here close above the previous high, therefore making this previous resistance become now support. So what is actually happening at the moment is that the market is retesting here previous weekly resistance turn support, and there's a good probability for a potential rejection to the upside away from this new support. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we can see how this area is clearly support. From here, the market created this rejection, then broke it to the upside. At the moment is retesting it as support. However, we can also notice how in retesting this support, the market is currently also printing this M pattern. And in general, after the creation of an M pattern, you would expect the market to create a rejection higher to go and complete the pattern itself at the previous support turn resistance. So here on the daily, what we could expect is a little bit more bearish price action and then a potential rejection higher for a completion of the pattern at the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for silver, what we can see is that with the last reports, we went from having minus 12.7k net positions all the way up to now having plus 8.7k net positions, meaning that we went from having more shorts than longs with 64.4k shorts compared to only 51k longs, all the way up to now having a positive net positioning of 8.7k net positions with 51.9k longs and 43.2k shorts. So silver has been getting quite bullish lately also from an institutional perspective. So it seems like there is definitely the possibility for this rejection to the upside away from this area and the potential completion of the M pattern at the neckline. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection higher for the market to complete this M pattern at the neckline, which is this previous support turn resistance here from a daily perspective. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have a massive upfront discount on the mentorship program. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment, we still have some time for this offer before it ends, and you can join here and gain automatically access with email and password that you will create during the checkout. But I suggest to join as soon as possible because we still have limited spots. So even though here we still have 3 weeks, if spots get filled before, the offer will end. So I suggest that you join and gain automatically access with email and password that you will create during the checkout. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.